Good afternoon, everybody, and welcome to this webinar for foreign companies working in Finland for the construction sector. My name is Tiina Depo, and I will be the presenter in this event. Before we start, I will say just a few words about this webinar. So today we will have two different presentations. First, Samir will give us an overview of the tax obligations of foreign companies. And then Karula will come and tell us about the employer's obligations and about the information reporting requirement for the construction sector. If you have a question in mind, don't hesitate to ask. Our live chat is operating and we are ready to answer your questions. And you can enter your question on the chat window below the screen. But without further ado, let's start and welcome Samir.
Hello, my name is Samir Abdun and I work for the Finnish tax administration in the corporate taxation team. Today I will talk to you about the obligations of the foreign corporations that come into Finland for business activities. So, first of all, we will be starting with the basics, the taxing rights of Finland. Which means when a foreign company comes to Finland, basically Finland has the right to tax all the income that is generated by these business activities. We will also discuss about the tax treaties which limit the taxing rights of Finland. After that, we will back off a bit from the theory and go into the practical side of starting business in Finland. We will talk about registration and what it means in practice and what obligations you have when you are starting activities in Finland as a foreign company. I will be presenting you with the different registers we have and of course the forms you need to submit for the Finnish tax administration to get your activity started. After registration we will talk about permanent establishment. What does it mean? When does a company have a permanent establishment in Finland? Different rules. We have general rules and then we have a bit more specific situations concerning the permanent establishment. Lastly, we will talk about income attribution. Concerning income attributions, I will talk to you about the arm's length principle. And also the taxable income and deductible costs of a possible permanent establishment. So, as I said, we will start with the basics to paint you a picture of the main rules of international taxation for companies. So, as you can see in the picture, in a situation where we have a foreign company working in another country, we have the resident state and we have a source state. So let's take an example of, for example, a French company that comes to work in Finland. The resident state of the French company is of course in France, and the source state for the income generated in a foreign country, we could say it's Finland. A French company coming to Finland to make some business activities. According to the national law of Finland, any foreign company coming in Finland is liable to pay income tax on all Finnish sourced income. that means that the basic situation, the main rule is in Finland that the foreign company pays tax for all income generated in Finland. But if we look at the situation with two tax treaty countries, the tax treaty always diminishes the taxing rights of the source state. So the main rule is that taxation happens only in the state of residence. This is a French company always is taxed in France. The exception to the main rule is unless there is a permanent establishment in the source state. In a case where there is a permanent establishment in the source state, the company has to pay income tax from the income generated by that permanent establishment. Of course, a company can have several permanent establishments all around the world. So I talked to you about tax treaty situation. Finland has signed tax treaties with over 70 countries. Some of them are unilateral tax treaties. For example, let's take the tax treaty between Finland and Lithuania. And some of them are multilateral. For example, the tax treaty between Nordic countries. The tax treaties are based upon the OECD model tax treaty. The Organization of Economic Cooperation and Development, which is OECD, they have created this model tax treaty, and most of the OECD member countries and non-member countries use this model treaty as the basis of the tax treaties, as is the case with Finland's tax treaties. Naturally, OECD, they have this model tax treaty. They have also a commentary on this tax treaty. It's called the Commentary of the Model Tax Convention. And this is used as an interpretative source when tax administrations are interpreting these tax treaty situations. The OECD commentary is not binding as such. It is only an interpretative source. But the tax administrations and the courts of justices use it when interpreting the tax treaties. So, back to the taxing rights of Finland. As I said earlier, the according to the Finnish national tax legislation, foreign companies have a limited tax liability. This means that the foreign companies are liable to pay income tax on their Finnish-sourced income only, not worldwide, naturally, only from the Finnish-sourced income. This can be found in the Finnish Income Tax Act and the Act on Assessment Procedure. Concerning the income attribution, if a foreign company has a permanent establishment in Finland, it must pay tax on all the income that can be attributed to that specific permanent establishment. Okay, so as I was talking about the tax treaties, the objective of the tax treaties is for different states to agree on how taxing rights are shared and divided between these contracting states. When a tax treaty applies, income tax cannot be collected simply based on national legislation. So, Finnish national legislation, according to Finnish national legislation, all income generated in Finland that has a source in Finland should be taxed in Finland. But in a tax treaty situation, this does not apply. We apply the tax treaty situation. According to the tax treaty situation, the income is taxed only if there is a permanent establishment. Or, of course, there are some exceptions, for example, income from apartments or something like that. The tax treaties usually include a provision that on the taxation of business that will usually allow Finland to tax the business income of a foreign company when this permanent establishment is in Finland. Concerning double taxation situations, tax treaties generally always include provisions on how to eliminate double taxation. This can happen, for example, when a taxpayer that is domiciled in a treaty country receives income from another treaty country, another foreign treaty country. So back to the OECD model tax treaty. As I told earlier, these tax treaties are based on the OECD model tax convention of income and capital. This is usually used as an interpretation by both OECD member and non-member states when interpreting the tax treaty situations. For example, the Finnish tax administration uses this commentary for purposes of interpretation if there is no contradictions with the tax treaty itself, because of course the tax treaty is binding, and the OECD model tax treaty is only it's only an interpretative source. So we will back away from the theory a bit and go into practicalities. Registration. So when your company starts business in Finland, there are some steps to take to get at least a business ID and to go to the registers, to sign up to registers. We have this thing called Y form. You can find it on the website that you can see on the paper. It's ytj.fi. The Y form, you have to put all the general information of the company. You can the basic informations, the name of the company. You can. What is important to remember is the accounting period. So the accounting period should be the same as the head company in the resident state. As a generalization, usually the accounting period is calendar year. Not always, but as a generalization. So, for example, if it's calendar year, it's the 1st of January until the 31st of December. Then we will talk about what registers to sign up into. We could say the most important are the prepayment register, the VAT register, which is the value added tax register, and the employer register. So the prepayment register. When a work is done by a foreign company in Finland who is on the prepayment register, the payer does not need to withhold the tax of 13%. This withholding tax must be withheld by usually the Finnish company that pays for a service for a foreign company, unless the company is in the prepayment register, or in some cases if the company presents, the foreign company presents a tax at source card, which I will go back to later. We have the VAT register, and in this case foreign companies must become registered in the VAT register if VAT is to be charged of their sales of goods and services, and if the operation gives rise to a permanent establishment for VAT purposes, which is slightly different than the permanent establishment for income taxation, which I have been talking about during this presentation. I will not delve further into the VAT matters. Concerning the employer register, my colleague will present you with more detailed information in the next presentation. Each time a company registers to a different register, let's say a company is, for example, in all of the 3 registers, it creates obligations. For example, it can create some obligations to submit forms or answer into inquiries sent by the tax administration. It is very important that the company attends to all obligations and possible information requests concerning registers and registrations. Excuse me. Concerning the withholding tax of 13%, which I promised to come back on, if the company only has one single assignment in Finland, it is not necessary to submit. It is not necessary to submit the Y form, go to the prepayment register, and so on. This company may apply for a tax at source card. So how does this work? The company, the foreign company who comes to work in Finland can apply for a single assignment, can apply for this tax at source card. If the company gets a 0% tax at source card, that company may present the card to the payer, and then the payer does not need to withhold this 13% of withholding tax. The company applying for the tax at source card, in order to get a 0% tax at source card, the company cannot have a permanent establishment in Finland. In the case of a company getting a tax at source card, it does not need to enter any registers or give the Y form to get a business ID and so on. It will all be handled by the tax administration in Finland. Okay, back to the theory. So the permanent establishment. In this part of the presentation, I will talk to you about what is a permanent establishment, when does a permanent establishment start to exist, when does it cease to exist, and when there is no permanent establishment situation. We have several different rules for the permanent establishment. We could compartmentalize them to the general rule and to the more specific rules, for example, concerning construction and installation projects. There is some other special situations as well. So the general rule is in its core, it's simple. It's the existence of a place of business. Of course, it can be up to interpretation what is a place of business. There are some examples. The list is not exhaustive, so it is up to interpretation. But it can be, for example, a place of management, a branch, a factory, workshop, can be a mine, oil, gas well, or any other natural extraction point of natural resources. A place of business must meet some conditions. For example, it must be established on a distinct geographical place. It has to have a certain degree of permanence as well. If it is really quick, if it's come and goes, then it may not be a place of business. Thirdly, the business must be carried through this fixed place of business. So we have at least 3 conditions that must be met for a place of business to create a permanent establishment for a foreign company. More or less, any premises used for carrying on business may be interpreted as a place of business. So, for example, in theory, it could be a worker for the company or the director of the company who is carrying on business from his home that can create a place of business to the home of that person. Here you can see a small map on the basic definition of permanent establishment, or the general rule, as I said earlier. So, as you can see from the picture, it is required that it has a fixed location. A fixed location, or let's say the permanency of a place of business. There is no exact time limit. The OECD Model Tax Convention mentions 6 months to be a good rule of thumb. But as I told earlier, the OECD Model Tax Convention is not binding, so this is only to help interpretation in situations where interpretation is needed. Well, what we can derive from this is that a temporary and a short-lived setup does not usually constitute a permanent establishment. Then one of the requirements is that the activities has to be carried through this place of business. So basically, it means as it says, the company must conduct actual business wholly or even partially from this place that is geographically identified place, permanent place. As I told as an example earlier, the director working from his home, it can be a permanent establishment, a home office, or any other place of management if it's situated in, for example, Finland. To the specific rules, so we just talked about the general rule of the permanent establishment. The specific rules, they include, for example, construction and installation projects, which is important for these presentations. So the basic rule is that any sites where a construction, installation or assembly operation is performed may be regarded as a permanent establishment. In construction and installation, what is important is the time period. When did the construction and installation start and when did it end? Also, with construction and installation, there are even big differences between different tax treaties. In some tax treaties, it can be the limit for the permanent establishment can be 6 months. It can be 12 months, or it can be 18 months. Probably in the most of Finland's tax treaties, it's 12 months. That is usually the basic rule. But there are some countries that have 6 months and some are 18 months. This should always be verified from the tax treaty, current tax treaty. Temporary interruptions or short periods of inactivity are normally regarded as inclusive. What this means is, let's take for example a French company as was earlier. In the tax treaty between Finland and France, the construction and installation project has a time limit of 12 months. This means if it exceeds the 12 months, there is a permanent establishment for that particular construction project. If it is under 12 months, there is no permanent establishment, at least on the basis of construction and installation. Of course, you have to take into account the general rule or some of the specific rules I will present you later. So let's take an example. This French company comes to Finland and works with the installation project that takes 9 months. Then they have a 1 month period of inactivity or pause or summer vacation, and then they have 9 months. Then they continue for 9 months. In this case, we will include this temporary interruption or short period of inactivity, which means that it will not be 2 different projects of 9 months, but it will be 1 project which exceeds the limit of 12 months. It will be counted as 1 construction project of 19 months. Of course, if this company would have done, for example, 9 months in any city of the southern Finland and 9 months in a completely other project with another company in the northern part of Finland, this would be a completely separate project. Then the 12 months would not apply naturally. As I said, if this company has several projects in Finland, of course they are not counted together. They are treated as separate projects, unless there is a commercial and geographical connection, which means that they are on the same street, on the same working site, and with the same business partners. Then it can be seen as one big project. Concerning this, if this project is artificially divided up, it will naturally be considered as one single unit. Special situations. We have, for example, shipyards. Shipyards can become a permanent establishment in itself. this is a special situation concerning all other construction and installation projects because the length of the projects are not taken into account in shipyards the same way as in normal installation and construction project. In the case of a shipyard, the permanent establishment can become a permanent establishment on the basis of the place of business. I will come back to this on the next slide. We also have a special situation concerning the dependent agent. A dependent agent may create a permanent establishment in itself. This dependent agent needs to have the authority to regularly enter into contracts and to receive and fulfill orders. As I said earlier, permanent establishment for the purposes of the VAT is determined completely separately. It has it is not that distinct, but it is not exactly the same either. There are also preparatory and auxiliary activities. These are not always. This does not necessarily create a permanent establishment. Let's say, for example, a construction company that does only advertising, research, maintenance of a stock of goods in Finland, even if their essential part of their business is construction. That could be seen as a preparatory or auxiliary activity. But if this company is a company that conducts research as a essential part of the business of this foreign company, then this activity can create a permanent establishment on the basis of, for example, the general rule for permanent establishment, if there is an office or the person working is a dependent agent. So, attribution of income. In this part, I will present you shortly how to attribute the income of a permanent establishment, the losses, the incomes, and we will go also shortly the arm's length principle. So, we will go through the arm's length principle, the separate entity approach, the company's obligations of declaration, and the taxable income and deductible costs of the permanent establishment. So, the arm's length principle, what it is? The arm's length principle is a situation where two companies, the parties, are acting as independent and on equal footing. And this applies even if it's the same company. Let me explain. We have the company in the resident state and the company's permanent establishment, for example, in Finland. These two companies must act as if they are independent and on equal footing at arm's length. This means that the companies cannot overprice or underprice goods or services for themselves to shift income from one permanent establishment to the head company. This principle is applied when determining the income attributed to the permanent establishment, if there are some transactions between the companies. Naturally, a permanent establishment can have dealings with other parts of the company, other permanent establishment, the other companies, head company, but they have to be on arm's length. If they are not seen as arm's length, it might be adjusted by the tax administration. The separate entity approach means basically that a permanent establishment should be considered as a separate entity from the head office, only for the purpose of taxation. A permanent establishment as a separate entity can generate profit or loss regardless of the whole business enterprise, because it is accounted as a separate unit, even if it's the same company, only the permanent establishment of that company. The obligations of declaration. Foreign companies are obligated to provide information if the authorities should ask them to do so if they have any business activities in Finland. If, for example, the tax administration sees that there is a permanent establishment in Finland for the company, the taxation might be estimated if the company fails to provide a tax return. Concerning the languages of the inquiries and tax decisions, the official languages are Finnish and Swedish. Information requests, however, can be sent in English, but all the decisions are in either of the official languages. Okay, the obligations of declaration if a permanent establishment exists. The company must file a tax return. The tax return is called 6U, and the deadline is 4 months after the end of the month when the financial year closes. So, for example, if it's calendar year, the 31st of December, you have to count 4 months after that is the last day to file the 6U form. As a side note, the corporate tax rate is 20% in Finland. If the company has business activities in Finland, but it does not have a permanent establishment, or the company does not see them as having a permanent establishment, the company has to file a 6U tax form, empty, only with the basic information, and the Appendix 80, which is an account of local operations. The taxable income generated by a permanent establishment is defined in the Finnish Business Tax Act. Usually business costs related to the income generated by a permanent establishment are deductible. For example, the payroll costs of a permanent establishment. They can be, for example, costs that have happened in another country, for example, the home country of the company, if they are directly related to the activities in the permanent establishment. As I said, expenses of a permanent establishment remain deductible even if they have arisen in other countries than Finland. Shortly about the losses, they are deductible during the 10 subsequent tax years. Here you can see additional information you can find on everything I have presented to you today. And without further ado, thank you.
Thank you, Samir. We will have a short break now, so we will continue the webinar in 5 minutes. Welcome back. So let's continue the webinar now. And next, Karula will come and tell us about the employer's obligations and about the information reporting requirement for the construction sector. Let's welcome Karula.
Hello. I am Karula Bäckström. I work at Helsinki Area Tax Office as a tax specialist. And my specialities are international taxation of individuals and the construction reports. And here is an illustration about today's presentation, the main parts. I'm going to tell you about the tax number which is needed for those who work on a construction site in Finland. Then I'm going to tell you a little about employer obligations, for example, when an employer from abroad must register and pay withholding tax, and which reports must be made to the Finnish tax administration and when. I will also talk about the tax liability for employees working for a foreign company in the construction sector. Finally, I will describe the construction work reports. So first, tax number for the employees. Everyone working on a construction site must have an identification card with the person's name, picture and tax number marked on it. You are not allowed to enter a site without one. The tax number must also be in the public register of tax numbers. And how to get a tax number? To get a tax number, you must visit the tax office. And in order to get the tax number, you need a Finnish identity code. And you can get the identity code at the tax office as well. After the tax office has given you the identity code and the tax number, you will get a Finnish tax card or prepayment tax, depending on whether the employer has a permanent establishment in Finland or not. The tax office will also enter your tax number in the public register of tax numbers. Then, what documents are needed? What do you need to do before you can get an identity code and a tax number? First, you must fill in form 6150E. This form is called Registration Information on a Foreigner Staying in Finland Temporarily. You can sign the form later at the tax office. And then, to get a tax number, you must fill in either form 57E or form 5042E. 57E is used if you stay in Finland for 6 months or less, and the other one, 5042E, is used if you stay in Finland for longer than 6 months. And the form 5057E is called an application for non-resident taxpayers tax at source card prepayment calculation tax card. And form 5042E is called application for tax card prepayment calculation. Current or previous foreign residents arriving in Finland for longer than 6 months. That's why we prefer using these numbers for the forms. And these forms will change in the near future, but we will update the links to this presentation. And when you have filled in these forms, then you make an appointment to the tax office. And your employer also can make this appointment. And when you visit the tax office, you must confirm your identity. And you must bring your passport with you. And then you must also bring some other documents with you when you come to the tax office. All the forms that you have filled in, a valid passport or an official proof of identity, not a driver's license, a valid residence of permit or visa if necessary, and a photocopy of your work orders, your work contract or your employment contract. And if you do not bring these documents, we cannot give you an identity code and you cannot get the tax number. And without a written employment contract, we cannot give you a tax number. The following information should be included in the employment contract. We need the employer's name, address, identity, and the name of your employer's customer in Finland, your full name and date of birth, how long you are working, start date and end date, the place where the work is done, a short description of what you do. If this information is not found on your work contract, then you must show us a written document from your employer which contains all this information. And then you also need a copy of the A1 certificate if you have one. A1 certificate means that you are covered by the social security system in your home country. And if you do not show this certificate, you will have to pay health insurance contribution. And then the tax office gives you a tax number and enters you in the public register. The tax office also makes sure that your tax matters are in order. We will give you a tax card or instructions for making prepayments. And then employer obligations. In this part of the presentation, I will talk about foreign employers and its obligations for tax purposes. I will repeat the issue of tax number shortly because it's important, and then I will talk about how a permanent establishment affects the taxation of the employees. Samir has already presented the issue permanent establishment, how a permanent establishment is constituted, and I will not go into that issue in my presentation. However, I would like to point out that the constitution of a permanent establishment for a foreign company does not only affect the taxation of the company, it also has effects on the taxation of its employees. So, as I said previously, everyone working at the building site must wear a name tag with a photo and their individual tax number printed on it. The worker's tax number must be entered in the tax number register. And in order to get the tax number for your worker, you must give the worker a written contract of employment. The contract must contain employer details and the party in Finland who ordered the work or services, and the worker's full name, date of birth, length of employment in Finland, including start and end dates, the place where work is done, and a short description of the work to be done. And then you must, the employee must fill in this form 6150 and see above. And then the employee should fill in this form 5057 or 5042, as mentioned above. And please tell your worker to visit the local tax office. And then I will talk about how the permanent establishment affects the taxation of the employees and the employer obligations. So if your company has no permanent establishment in Finland, You are not obliged to seek entry in the register of employers. However, it is possible to register on a voluntary basis. Even if you do not have a permanent establishment in Finland, you must give an annual information return for salaries and wages paid in 2018 for resident employees. That means employees staying in Finland for longer than 6 months. You are not obliged to withhold tax on the salary. The employees pay prepayment tax. There are exceptions also to this, for example, the 183-day rule. In any case, for resident employees, the annual information return must be made. If your company has a permanent establishment in Finland, you must register your company as an employer under certain conditions, which are: you pay wages to 2 or more employees or workers on a permanent basis, or you pay wages to at least 6 employees or workers with temporary employment contracts. 2 or 6. To register your company as an employer, please submit Form Y1, Y2 or Y3. When you are registered, you must withhold tax on all wages paid out. The amount to be withheld depends on the percentage rate marked on the employee's tax card or tax at source card. The withholding is made on the gross amount of the wages. The employee gets tax card or tax at source card from the tax office. If your employees do not have documentation of being posted employees, for example Certificate A1, you must pay the employer's health insurance contribution. And then reports. You must give the annual information return for wages paid in 2018 for both resident and non-resident employees. You must also file monthly reports of employers' contributions. The amount of taxes withheld and health insurance contributions must be filed and paid monthly to the tax administration. You must report and pay on your own initiative. And then there are consequences of non-reporting. Late payment penalty charge if you report after the deadline. If no report is filed, we can estimate the amount of tax to be paid and impose an additional surtax. We can also impose a charge for negligence if you are late or do not follow the formatting instructions. If no employer payroll report is filed, we can remove you from the prepayment register. And if you do not withhold taxes on wages, we can collect the taxes from you and remove you from the prepayment register. And then the tax liabilities for the employees. In this part of the presentation, I will talk about working as an employee for a foreign employer. At the end of this part of the presentation, there are links to our website where you can find information on employee leasing and self-employed persons. Employees living or staying in Finland for 6 months or less. An employer with no permanent establishment. You are considered non-resident in Finland if you are staying or living in Finland for 6 months or less. If your employer does not have a permanent establishment in Finland, you do not have to pay tax in Finland in most cases. There is an exception if you work as a leased employee. Finland has, in the case of some countries, the right to tax your salary. Example of countries: Estonia, Latvia, Lithuania, Germany, Poland and the Nordic countries. However, even if Finland does not have the right to tax your income, you will have to pay health insurance premium if you don't have A1 certificate or similar certificate and you work in Finland for at least 4 months. If you are non-resident, staying 6 months or less in Finland and your employer has a permanent establishment in Finland, you must pay tax in Finland in most cases. You must also pay health insurance premium if you have no A1 certificate or similar and you work for at least 4 months. Therefore, it is important for the employer to contact the Finnish tax administration to make sure whether a permanent establishment is constituted or not. For non-resident employees, the final withholding tax is 35% after a deduction of 510 euros per month or 16 euros per day. You must get the tax at source card to get the deduction. You may also apply for progressive taxation by filling in Form 6148E. With a normal salary, the progressive rate is usually lower than the final withholding tax. If you stay longer than 6 months in Finland, you are considered resident for tax purposes. You are liable to tax on your worldwide income. This means that you pay progressive income tax on wages and other earned income. You are also liable to tax on your income from abroad. The tax treaty between Finland and your home country can affect the right to tax. If you are staying longer than 6 months in Finland, you should get a tax card from the tax office and give it to your employer. If your employer doesn't have a permanent establishment in Finland, you will have to pay prepayment tax yourself. You get a prepayment calculation from the tax office. If your employer has entered voluntarily in the employer register, you can get a tax card and give it to your employer that withholds the tax and pays it to the Finnish tax administration. And in both these cases, fill in Form 5042E application for tax card or prepayment calculation. You can also use the tax percentage calculator to estimate your taxes. You must also file a Finnish tax return. Then a few words about the leased employees. There are special rules concerning taxation of leased employees. I will not go into them here in this presentation, so please see our website, Work in Finland, these employees, for more information. And if you work as a self-employed person or entrepreneur, please visit our website, Work in Finland, working in Finland as a self-employed person. And then a few words about construction work reports. The final part of this presentation is about construction work reports. The obligation to report began on July the 1st, 2014. Every buyer of construction work must file reports on their construction contracts. You must report when the project begins and then every month when your supplier has invoiced. Project supervisors on a shared construction site must give details on the employees working on the shared site. Every employer on a shared site must report its employees to the project supervisor. And self-employed persons must report themselves to the project supervisor. Employee reports must be filed every month. Reporting deadline for both reports is the 5th day of the month. Reports must be filed by the 5th day of the 2nd month following the reporting month. For example, the details that concern October must be submitted by December the 5th. And the reports are e-filed. You can use suomi.fi or ilmoitin.fi. There are two types of reports. First, the contract details. You must file a report on a contract to the tax administration if you buy work or sign a contract that is considered construction service under the Value Added Tax Act. You must also report if you buy services of setting up and dismantling of scaffolds for a building, and if you lease employees to do work that relates to these services. In addition, the value of each contract must exceed 50,000 euros. This means that every buyer of a construction service must file reports if the value of the contract exceeds 50,000 euros. For example, if a foreign company buys construction work from another foreign company for more than 50,000 euros, reports must be submitted. If you do not buy any of the services mentioned above, you do not have to report. The contractor that only works on a site without ordering any service from a subcontractor is not obliged to submit reports. And then the employee reports. If your company is the project supervisor of a construction project at a shared site, you must file reports of employees every month if the total value of the shared site exceeds 50,000 euros. Every shared site must have a project supervisor. A shared site means a site where at least two companies work at the same time or immediately after each other. At a shared site, you must also have the tax number. For every month, each employer gives details on its employees that have worked on the site to the project supervisor. And the supervisor submits the details every month to the tax administration. For example, reports for October must be filed by December the 5th. And finally, I have here a checklist what to remember. First, the permanent establishment for the company and registration, tax number for the employees, employers' obligations, payments, reports, tax card or prepayment calculation for the employees, and then finally the construction work reports. And here I have some useful links where you can find more information on our website. And thank you for your attention.
Thank you, Karula. Before we stop, I will just tell you how to contact us if you need to contact us. So, first of all, I recommend you to look information from our website, tax.fi, and if you type the shortcut tax.fi, work in Finland, you will find several useful links for instructions. So you should check out that. And of course, if you want, you can always call us. So I have put here the numbers for the service lines for individual taxpayers and also for foreign companies. But you can find all our service numbers on our tax.fi page, Contact Us. So there you can see them all. And also you can book an appointment if you want. So we have an appointment reservation service, and you can find it through this link that I put on this slide, but also you can find it if you type on the search field on our main front page, appointment. So you can find it also that way. So that was all for today. I want to thank you all for listening and remind you that this video will be available on our YouTube channel right after this live event. And if you want, you can of course watch it again. And in the end, I want to wish you a very nice day and lovely autumn. And you are very welcome to join our events again if you feel like it. Thank you and bye-bye.